now.
Hey everybody, it's Juli Pitra. It's time again for my Thursday talks. And I am really excited about this topic. Tonight we're going to talk about the 1040 and their associated schedules. But first, let me do a little bit of a brief introduction. For those of you that don't know me, my name is Juli Pitra. I'm originally from Colorado Springs, Colorado. I've lived in a few places. I went to undergrad at Georgia Tech, got a nuclear engineering degree, if you didn't know that. And I have a master's, an MBA that I got from Washington University in St. Louis, which is the same place I met my husband of almost 27 years. We have 2 kids. He's put up with my crazy and my chaos, and so he's going to have a halo over his head in the meetings that he comes to. I have experience in the power industry, which is where I learned a lot about the spreadsheet talents that I love. And I was pretty much a stay-at-home wife and mom for close to 20 years. And then I decided I wanted to do something else and was suggested to go into real estate, first to get educated, then to get a mentor. I've been growing in real estate for about 9 years now, almost 10 years, almost 10 years. And I'm a realtor, I'm a coach, I'm an investor, and I'm curious about all things that touch what I do. And so with that said, I'm trying to find my Zoom meeting again. I just love everything that's on my computer. If you could see it, you would see just how crazy, and there we go, just how chaotic everything is. So now I'm going to come up with my presentation. Give me a minute, because I'm moderating myself right now, which is fun. Everybody having a good time? Let's see. Where's the present button? This happened last time. I couldn't get the present button going. I can do it every other time except for when I want to do it. Let's see, is it share? Anybody who has Canva expertise, how do you get this thing to do present when you want it to? Oh, Lord. Last week we had our lovely moderator to help. Anybody with Canva experience, help me out here. I might have to go from here. Or I hate this when it happens. Okay, so I will just start talking about the 1040s while I'm still trying to get this up. So the thing I would like for everybody to understand, I am not a CPA or a tax professional. Everything I'm trying to talk about today is to help you speak to your CPA or tax professional and to optimize that time so you can make the biggest expense, most people's biggest expense is their taxes. And for entrepreneurs and business people, that's something they can mediate through a variety of strategies. And understanding the tax schedules, the 1040, which is the main tax document, the schedule that support what goes on the 1040. And that's where you get the opportunity to make a big dent in the taxes that you owe. And why I can't get this to present. So what we're going to do, I'm so sorry, is I'm going to have to share it in not present mode until I figure out how to do that. So we will share. Now, just because I don't know how to do this on a particular app, as far as sharing my screen, doesn't mean I don't know other stuff. It's just I have channels of what I know. So anyway, can you see this? And like I said, I'm sorry that can everybody see?
Yes, but it's not in present mode.
Well, I just been saying I don't know how to get it into present mode.
Okay. Yep. So
That's
just,
been the whole thing. I have no idea. So if you see a button that says how to get it into present mode, that'd be great.
I believe
Here's,
it's by creative design, if you go left a little bit, well, no,
oh,
there
there
you
it
go.
is. I found it. I found it. Yay.
There you go.
Okay. I'm so pleased. That's one thing I did. All right. So there are several strategies within Pitranomics, and one of them is to pay Uncle Sam only what he's due. Many of us, when we think about filing our taxes, it's something we think about in the beginning of the year to handle the taxes from the previous year. I want to change your mindset. I want you to be proactive. I want you to start thinking about the taxes you're going to be paying next year, this year, so you can understand what you need to do to structure your business, what documentation is necessary, how that document needs to be transmitted to tax. Be proactive with your tax mediation strategy. Don't just wait until all you're doing is giving numbers to somebody. Help manage what those numbers are going to be. So anyway, here is a graphic that shows all 10 strategies. And by the way, I may not be able to see, may not always be able to see what's going on. But anyway, these are the 10 strategies. I'll give you about a few seconds to look those over. What I love about these is you start with setting your goals. You start with figuring out what your resources are, and then you go to figuring out how to recycle through these. One more thing I got to do here. Give me just a minute that I don't know how to do. Here we go. Oh, not working. Give me just a minute. I need to stop sharing for just a minute, fix something in my Zoom. And this is one thing I want you to see is this happens with everybody. There are things that you know very well and things that you don't. And give me just a minute here. We're participants. I'm frustrated. I know what I need to do. I need to be able to see. Okay. There we go. Now I'm going to share again. Okay. Thank you for your patience. So the strategy we're talking about is paying Uncle Sam. Get back in this. And we're going to discuss the schedules, 1040 schedules. So for those of you that don't know what the 1040 is, it is the basic summary document that has all of the high level information about your tax returns. All of that other stuff, if you have a long tax return that's a few hundred pages or even 1,000, or a short tax return that's maybe 2 or 3 pages in addition to the 1040, all that information shows up on the 1040. That's like the table of contents. Everything else are the chapters, verse, and supporting documentation. A lot of us don't really think about the schedules. I know I didn't give them much thought until I became an independent business person, basically making my own financial decisions, making my own P&Ls. Thought about it a little bit, knew they were there, but didn't think about them strategically. And we pretty much always filed our taxes the end of the year, or sorry, the beginning of the year, gather up your documents, send it to your tax professional. But that's not what I want you to do from now on. I want you to think about developing the documents. So the benefits to understanding the tax schedules is you get to optimize the conversations with your CPA, okay? The whole thing is really good tax professionals are expensive. So wouldn't you rather spend your time strategizing and asking those really probing questions and not being explained what the 1040 is, what the schedules are, what you put on them, what information needs to be there? Have that done so you're not paying for that service. And heavens to Betsy, don't just hand your tax professional a box of receipts. Hand your tax professional a ledger that's got all the documentation that's going to make his job for you easier and your job working together much more optimal. Additionally, understanding your schedules helps you as a business person set up your business ledger. So for those of you that work with QuickBooks, there's something called the chart of accounts. And if you are aware enough to use the schedules to help guide how you set up your chart of accounts, then you're ahead of the game. That would make you ahead of me because that's not what I did. I didn't have a sound understanding of that when I started creating my QuickBooks. I'm slowly trying to now manage this behemoth of a ledger so that it's easy for my tax professional to look at, and we can then discuss it strategically. So don't make my mistake, make another one, make a better one. And the last thing I think it does, understanding the schedules, is you can really get a feel for what impacts your bottom line and how, and it helps you set up the key performance indicators that you need in order to better run your business. So with that in mind, keep in mind, we're going to go through quite a bit. If you have any questions, please feel free to put them in the chat or unmute. I don't mind interaction. I actually love it. So let's talk about the various types of income. Touch on just a few of these. That goes to a job and gets a paycheck and they get their taxes taken out and there's Medicare taken out and there's Social Security taken out. Those are wages and salaries. Most people are familiar with what those are. But let's say you work in the restaurant business or the hairdressing business, then you probably have to deal with tips. And then there are people maybe that invest different that either give or dividends. And if you have assets you sell, capital, hopefully proven value. And then there's different income from like rental property income, other business income, retirement distributions, and more. So there are many, many, many different types of income. That's the first thing I want you to understand. Many different types. Even if you have a job, you should probably have multiple streams of income that show up on your 1040. One of the things I'm going to really start emphasizing is that's what I believe everybody should have. Not just one source of income, but several. Even if it's not as significant as the immediate source or the major source, you can grow it and it helps provide a cushion. So keep in mind, there are many different sources of income. By the way, I hope we have this presentation available that we can either put a link in or something like that. That's what I wanted to have so that we could all just kind of look at it together while I'm looking at it. So now let's talk about the 1040, which is the primary tax return document used by U.S. taxpayers. I don't know other countries. I can't speak to it, but I think it's very similar if that you have a summary sheet and then you have all of these supporting documents. Now we're going to try something fun here. Yep, here we go. I can show this on the screen. I'm really excited about this. So this is the 1040. The first time I worked, I used the 1040 EZ. I made no changes. I had no understanding of all of these lines. Now I want you to just look that this is 2 pages long. The summary is 2 pages long, but you could still have hundreds and hundreds and hundreds of pages of documentation to support it. Now, what I love here is that they now have digital assets. I don't recall that existing when I first started my first job in 88 or 87, whenever that is. This here talks about the various types of income. This is the Schedule 1. The various types of income or distributions that one might have. And so, for example, let's just look at this. We have right here IRA distributions. I am almost 60 years old. The end of this year, I will be able to take one of my pensions. So I'm going to have my, I don't know if it's going to be rolled over into an IRA or a 401k, I don't know, but I'm going to have stuff on line 4A. I'm pretty excited about that. I mean, it's a sign of getting old, but I'm still pretty excited about that. And then you have the various things here that help you reduce your income. This is where the magic starts happening for how to reduce your taxable burden. And all of this is where, let's see, yep. starting here and here is where you start reducing the income you will pay taxes. Now, business person, income is not the, you sell 100 widgets at $5 each, you have $500. That's your revenue. But your widgets cost money, your business costs money, you have salaries, you have costs to make the widgets, you might have marketing costs. You take all those expenses away, and what you have left is your income. And that's what you pay the taxes on. So let me see, go back here. There we go. So that's the 1040. Any questions about that? Let me know, I'll get to it. Okay, there we go. So now let's talk about Schedule A. Most people, what I did, I took the standard deduction. I didn't have any assets really to speak of. I didn't have any ways to reduce my deductions. I didn't make any charitable deductions. I didn't own any house, so I didn't have interest rate deductions. I didn't have any of that when I first started. Mortgage expense, I didn't make any charitable deductions my first year. I didn't think to deduct for state and local taxes. I did have them. I didn't think to deduct for these things. Had no idea. I just took the standard deduction. But let's look at Schedule A. By the way, I'm so excited to be able to do this. These are your itemized deductions. So now, if you are in a state that pays state taxes, which is not Texas, then you don't want to pay taxes on the taxes on the taxes on the taxes. So the state taxes that you pay are able to reduce your tax burden. Your used to be, sales taxes. If you keep track of them, I think there is a guideline number. Keep in mind, I am not a CPA. I am not a tax professional. I just want to give you the tools to speak to those professionals. Here, home mortgage, interest, and points. So if you're paying points to reduce your mortgage interest, that number should be showing up in here. Now, if you make gifts to charity, if you need to document that, you need to keep your paperwork, and then you need to put that line item here. And if you have any casualty or theft losses. So for 2023, I will have those losses showing up on my rental properties because we had some vandalism, we had some theft, we had a whole bunch of stuff. That's going to show up for me. You're going to get your insurance check. Otherwise, that would just be more income. But the cost to fix that casualty is going to offset that insurance check. So this is where you itemize all of the deductions that you're going to put on your 1040 to reduce your income to get to your taxable income. Pretty exciting. What I love about this is that it gets even better. So here's Schedule B. It's used to report interest and dividend income. So this increases your income. If you have taxes, that pay, stocks, if you have stocks that pay dividends, then you're going to put it here. If you have accounts that bear interest, that pay you, you're going to put it on here. And let's play with this. Here's Schedule B. So if you have a loan, if it's fixed, if the amount that you will earn on that loan, I'm not talking about you took out a loan, I'm talking about you've lent to somebody. If the amount of interest you're earning on that, that's going to show up here. But if you have a stock, well, whether or not the dividends are distributed is somewhat to the discretion of the executive board or the investors, the investor board or whatever. So that's not necessarily guaranteed, it's not fixed. But if you get dividends for the year, then those show up here. And I'm going to tell you, the best way not to have your income increase here is to have these things that bear significant dividends in your qualified funds, like your 401k or in your IRA, which would show up elsewhere. But if you don't have that, it's still good to get that income showing up here. Nothing like residual income. That's what this is. Interest on an account that you earn, dividends on assets that you earn. Okay, so I will go back to this. Now, Schedule C. Here's the thing I also want you to remember. You don't have to use just one schedule. Ideally, you should be messing around with all of these schedules that we're discussing. But if you're self-employed or if you have income from a sole proprietorship, then you will use this schedule to talk about that income. So let's take a quick look at that. By the way, I'm a realtor. Even if I had nothing else going on, I would use Schedule C. And this is where I want for you to really pay attention as to how this can help you with your business. Look at this. These are expenses for the business use of their business use. So look at this, advertising. If I'm doing marketing of myself for my realtor business, if I'm buying leads, if I am running ads, if I'm taking pictures, all of that stuff goes on this line. If you're a realtor like me, you're using the heck out of your car. You get to take some of those expenses. Either you lease the car and it's got maintenance and all that, and you can put it there, or you keep track of your mileage. And the app I use, what is it called? I think it's Mile IQ. It keeps track of the mileage, and I can put my expenses there as commissions and such. I put those here. If you work for a brokerage, they give you a 1099, that number comes right back here. Depreciation of assets, this is a big one. So if you have a car and you're not leasing it or whatever, there's depreciation that you can use this number here against your car. Let's take a little bit of a break to discover what a capital asset is. Usually, if I buy an asset that's going to be used year over year over year, and I want to account for the use of that as an expense against my income, normally I have a calculation called depreciation, which is how much I have reduced the value of that asset. That's the part I expense in the current year. Current means this year. A non-current asset can be a multi-year asset. A current expense can be a multi-year expense. So right here, you want to cover depreciation of the assets that you have to use in your business. Other assets that are depreciated, your computer, your phone. Right here, I'm set up for my Thursday talks. I have lights, I have a mic, I have a cam, webcam. All of those things are what I use in my business. Those are also assets that I can depreciate. If you happen to have any legal or professional services, unfortunately, I've had to have a lot of that. So that number goes here. It offsets my revenue and help reduce the income from my business. And then that number goes on my 1040. And everybody's 1040. So let's talk about Schedule D. I'm going to be looking at some major use of Schedule D myself next year because I have sold some property that I've held for a number of years. So it's a long-term capital gain on it. I bought it years ago. It's increased in value. I have to now figure out what my cost basis is. So that's going to be the amount that I paid for it and any improvements, and over the years, any significant capital improvements I have made that will then offset the proceeds from the sale. Proceeds meaning there's a sale price and there's all the costs associated with selling it. So your realtor fees, this was out of state, so I had to pay didn't have to pay. I paid 2 sets of realtor fees. I paid title closing costs. All of that is going to show up on my Schedule D, and then I get to report my capital gains, which are taxed slightly differently than active income, but it still has to be showing up on my 1040, and I'm able to show Uncle Sam, hey, I made this money. Here's your slice, Uncle Sam. Now, if anybody figures out a solid way never to do that, and we've had some people talk about it, I haven't pursued that. We had Mr. Cedric Brown talk about trusts and things, and I haven't pursued it. Doesn't mean I won't. So if you guys remember that, and by the way, if we need to put his information back in there to look at that, we can do that. Try to take advantage of whatever works for you to mediate your taxes and to protect your assets. Okay, Schedule E. That talks about rental income. So as a landlord, I have houses that I charge people rent, and then their rent is my rental income. Some people have royalties. I don't have any of that. Wish I did. Partnership income. If you're in any kind of a partnership, the partnership will develop a K1, and that will talk about the income or loss that the partnership sustained for the year. S corporation income or income from trusts and estates, that all goes here. Let's take a quick look at this. As a landlord, you have to list out each one of the properties. So you know what? You will have multiple pages of this. You can have property A, fair rental days, and personal use days. I don't use my rental properties personally, so they're all fair use days. And again, when you're a landlord, you have the rents you receive, royalties if applicable, advertising, maybe you're driving to view the property. If a tenant turns, you have to clean it. If there's some kind of repair and maintenance you have to do. This is the kind of stuff, this is the gold right here. When you set up your chart of accounts in QuickBooks or your general ledger and whatever else, try to follow some of these. So it's really easy for you and your CPA to know how much did I spend on advertising for that property or all of the properties. Actually, I'm not so granular as to know what this is by property. I just take my general advertising marketing budget and pro rata it across my properties. Fair enough, it's good enough. Your insurance costs, your legal and fees, management fees, your interest. You use these types of expenses as guidelines for your general ledger. It takes less time for your professional to stick that stuff in, and then you can spend more time figuring out, how do I mediate these numbers? How do I plan for these numbers? And speaking with your professional, because you want to plan to sell something, when you plan to buy something, improve something, that buy professional. And there are various other schedules that honestly, I don't know a whole lot about them, but I wanted to mention a few here. And there's nothing wrong with trying to find out more information about the schedule that best suits you. I do have to have some use with the self-employment tax. Hopefully, I will live long enough to be able to get the credit for the elderly. I think that's like in 6 years. So then I'll be elderly. That'll be fun. And I'm also prepared to bring back any of the other schedules for discussion. So that's it for the presentation. And I know I saw some questions, so let me get to those. Do any of you have any questions you'd like to unmute and ask before I go to the questions in the chat? So the first question, and thank you for asking this, are some of these strategies similar to what Warren Buffett utilizes? I would say that Warren Buffett and his tax strategists use all of these strategies. They don't just look at what was spent and go back to the previous year. They are planning, they are making even long-term business plans, not just next year, but say 5 and 10 years down the road. What is the best tax treatment for any expenditure that's about to, for example, my husband and I are passive investors in multifamily real estate. When you sell that real estate, of course, when you buy it, it matters. Money leaves your account and goes into this partnership. What's equally as important to try to be strategic about is when that property is sold and when it comes back onto your balance sheet as income, capital gains, or whatever. And this is why. In a year where you have very little income, either capital gains income or long-term income or active income, then a large lump sum maybe won't matter as much. But if you're already high up, you have to be careful that those bigger lump sums on a year you've made a lot of money, you could easily, if you're careless, lose half of what you made. So that's why it's important to be strategic about when you make income. And on the flip side, when you make revenue, it's important to be strategic about the expenses that you employ to get your revenue down to an income number that makes sense. And you have to balance that. Let's say you want to use that income to buy a house, what's showing up on your 1040. Well, when you go to apply for a loan, and a lot of business people have these problems, when you go to apply for a loan, and if you've done really good work at mediating your tax burden, then your income looks low. And then you're not able to qualify for the qualified mortgages. That's why they're called that. And they're cheaper. So you have to balance that and optimize that with, well, I want to buy maybe a new home next year. I'm not able to qualify with the income I have. I'm going to show less on my expenses, so I have this greater income. I'm paying more taxes, but I have, the advantage of using this qualified mortgage. Or I'm just going to do the best and most optimal tax mediation strategy I can, not tax avoidance, not the illegal stuff, tax mediation, completely legal stuff. I'm going to do that to the best of my ability, and then I will have to get a non-qualified mortgage, which generally speaking is more expensive, but in the long run, it makes sense. There's optimization going on. There's very few times absolute perfection. And so you have to decide what matters more to you. On this side, maybe I want to maximize my expenses and take advantage of all of my strategies to reduce my taxes, or on the other side, maybe I want to have that a little higher so I can get these loans because that makes sense for me. One thing that I know people talk about, Warren Buffett doesn't pay much in taxes. Well, he might not pay much in personal taxes, might not show up a lot on his personal tax return. I haven't looked at his tax return in a while, but any corporation he's having, they're also employing these types of strategies, but they're still paying quite a few taxes. Donald Trump, who's been accused of not paying much in personal taxes, again, I haven't looked at his tax return, but he's done a lot in real estate and business and investing. So it's natural that the income side of his tax return isn't going to look as high as the cash expenditure fueled lifestyle he has might suggest. So again, let's take an example. Let's say as a realtor, you need to drive a nice car, and you get to expense that car off your revenue before you take your taxes. Well, it might make better sense to get a more expensive car to do that with than if on the other side, you're a wage earner, not just a wage earner, but a wage earner. And it doesn't matter really what car you buy, you're going to be buying that car with after tax money. It becomes less of a strategic decision unless there are other factors that enable you to expense those car related expenses. So Warren Buffett, in fact, anybody who has a lot of money and access to good professional help is taking advantage of these types of strategies on a much higher level than I can, because I don't have the fortune. And while I feel like I have access to very good professional help, I don't have access to Warren Buffett's professional help, or Donald Trump's professional help, or Elon Musk's professional help, unless if they're listening and they want to, spot me a free session with their professionals, I won't turn that down. So I hope that answers that question about that. Are there any more questions? By the way, Shamir has put the presentation in the chat. If any of you want to download it, write notes on it, whatever you want, there it is. So do we have any other questions? Let me see the screen.
I have a question.
Yes.
Just a moment ago, you was talking about your capital gain taxes. Okay,
Right.
now every state is different, I'm sure, as far as what is considered your capital gains. So would you just kind of let your audience know, like, at what point here in the state of Texas you hit that is considered your capital gain once you hit that thresh or go surpass that thresh?
Okay, so I'm not sure what you mean by every state is different about what's considered capital gains.
Well, I'm talking about the amount.
I'm sorry, say that again.
I'm talking about the amount of once you hit that threshold or that amount, or like if you do a sale and on a house and you acquire your capital gains through the sale of your house or your investment. Like
Okay, I'm gonna try and take a leap. I don't know if I'm gonna get it right. You let me know if I don't. if you sell a property in real estate that you've owned more than a year, then that's a capital gain. If there is a gain, now keep in mind, there may not be a gain. Your cost basis may be higher than your proceeds. That does happen. And cost basis isn't the same as purchase price. But and if you have questions about that, remind me to get back to it. But if you show a capital gain, how much you pay is going to depend on, if I'm not mistaken, anyone knows, your income bracket.
Okay.
So I don't know a whole lot about state tax returns since I haven't filed them in a very long time. Here in Texas, we don't have to file state taxes. I did have to file one because I had some properties out of state. And not only that, I had to pay city and I think city and state and municipal taxes on the income. And I got caught up one year because I didn't know that I had to pay taxes on that property. So I put a loan on the property in that particular municipality, which allowed me to take mortgage interest against that property, which kind of handled that problem. So those are the kinds of things you can be strategic with if you know what you're dealing with, which the tax professional will help you to understand. The important thing to remember about, let's say I'm a tax professional. I can treat the sale of real estate a little bit differently maybe than other people too. And that's not to say I'm a tax professional because I do it. I'm saying I'm classified by the IRS as a tax professional. And I'm able to take certain steps with my real estate that maybe the average person can't take because they're a wage earner as well, or because they don't spend the time documenting how much time they spend on their real estate, what expend for their real estate. You have to pretty much demonstrate that you do it. You can't be a passive real estate investor and then be, for tax purposes, considered a real estate professional. And I'm not sure if that's where you wanted me to go. Let me know if I didn't hit the answer right. Evan, did I miss or?
No, you did. You covered it.
All right, thank you. So I see a couple of questions in the chat. So I got to get, where's the chat? There it is. Look at this. Let's see if anybody asked a question. Here's a question. If you're a realtor, does it matter if you purchase or lease? Hey, will the purchase or lease what? Is that a car?
A vehicle, yes.
A vehicle? So 3.5 years ago, I bought, for me, a very expensive car. And the reason I did is because in that year, you were able, if you use the car 100% for business, to depreciate the entire cost of the car against income. I was so excited about that. I was like dancing a jig. I just had to get it done before December. I cut it close. So in that case, for me, in that situation, it was better to have purchased a car and then depreciated the entire amount of that car against income for that year. Now, if you, for example, don't have enough income to depreciate the entire cost of the car, as it would have been in that year, which I think was 2021 or 2020, I can't remember, 2021. I have no idea what year I bought that car. Then remember, you have to offset expenses against income, and you can take a loss, but only a certain number of years, and it gets a little complicated. That's why you go to your tax professional to get all that advice. But for some people, maybe it makes sense to lease a car and consider that a capital lease against your income. So each year, your lease payments and maintenance payments and all that go against your income. I hate to dodge that question and say, does it matter, yes or no? You must discuss that with your tax professional, because I'm a realtor, but I'm married to a man that has W-2 income. That's active income. My realtor income is active income. For somebody else that's not married to a man that has W-2 income, that might be a different choice or a different optimal choice for you. You have to get in touch with your tax professional. I will put in the comments after this the person that I use. He's been extremely helpful in making me look more strategically at my tax strategy rather than reactively at my tax strategy. Because what it used to be was gather up everything, give it to the tax professional, he puts it in this thing, and out generates a return, and we're like, oh, we got a return, great. No, this is not what we're doing. We're planning. Do we want to buy more houses next year? Do we want to enter into an automobile lease? Do we want to make some other major expenses? Do we want to sell some properties? You need to be strategic. Now, of course, there may be a time when you have to sell or buy or, whatever, and it's not strategic, but at least you can discuss the impact and how to soften the impact with your tax professional. So I hope that gets that question answered. Are there any other questions that anybody has about this particular topic, which is kind of a favorite of mine?
I got one more.
Okay.
Now, like every 2 years here in the state of Texas, we have to do our MCs or MCEs and whatever other educational enhancements or improvements that you need to do throughout the year. Do you also take for that as well?
You're talking about as any other agency or what?
Right. Like your educational, whatever you go to help promote or educate you on whatever business ventures that you're in for the year. And then do you take that on your taxes at the end of the year for whatever the cost was for that year?
Right. So and again, the tax, everything can be considered something that you can deduct. It depends on the type of business that you're running and if it's necessary to maintain that business. And that is why it is definitely required that you consult your tax professional. So most of the classes and the types of classes or continuing education that I take, I'll run it past my tax professional and he'll be like, yeah, most of that is what you need to continue to do your job. So it is tax deductible, meaning it offsets the income and reduces your tax strategy. Sorry, tax burden, not reduces your tax strategy. So this is why I believe you should make a relationship with a tax strategist instead of trying to wait until the end of the year and then you're surprised at what is or is not allowed. Ask up front so you'll know, document. One of the hardest lessons for me was trying to catch up years of investing expenditure, and I hadn't kept such careful records. It was kind of all up here and not well done. So I'm much happier. Not to say that I'm perfect, because keeping up with your books is a gargantuan task. And I don't know anybody that does it perfectly. But given my time constraints, I think I do a pretty good job. So another thing to do, Evan, I'm going to say this. I have credit cards that I use for business. So all of those expenditures go into my QuickBooks, and I can allocate, which type they are, where they go, and then I review it with my tax professional. But if there's something large that's looming, I don't wait until the end of the year to ask. I ask ahead of time. If not before I make the expenditure, then shortly after. And sometimes it's a text. Hey, this is what I did. Thoughts? And then, I'll get an answer like, thanks. And then you keep going. Your tax professional is a business resource. And by the way, his expenses do go off reduce your revenue and lessen your tax burden. Okay, let's see. Is there another message here? Do you recommend utilizing a UIL strategy? That's a universal, come on, what is it? Something, I'm losing the, it's insurance that has an investment part to it. And so it creates a cash value. I recommend those types of investments in insurance if you and your tax strategist have discussed it and decided that is appropriate for your business. I do not currently have any of those strategies. I've looked into them. I keep looking into them. But when I compare them to what I'm doing with real estate, it has not yet been clear to me the advantage of using those over what I'm doing. Now, should I change what I'm doing? Then I change my strategy. But as of right now, I have not found them to be something I'm willing to put in my strategy that has nothing to do with whether or not it should be put in somebody else's. One of the things I would look into is how those insurance policies affect your retirement distributions. And for some people, that's where it's really, really, really powerful, how it doesn't affect their other retirement distribution options. And I think I had someone on Pitranomics a while ago. I don't mind bringing somebody back to discuss this because I think it's important. But like I said, there is no one size fits all for a tax mediation strategy, except here's the strategy that's one size fit all. Get yourself a good tax professional that is competent and can give you guidance in the industry that you're in. Be diligent about maintaining your books and documenting your books, and don't wait until the end of the year to try to come up with a full year's worth of documentation, because then you're not able to be strategic. Even though I have done that, I'm telling you, that's how I know that's not the way to do it, because it's much better if you do it piecemeal. And let's see, good tax professional, and get to know what's on the schedules and try to understand how those different line items on the schedules, particularly the most important ones, affect your tax burden. I'm not looking for anyone to become an expert on 1040 schedules. I'm looking for you to understand them enough to be a help in being proactive with your tax mediation strategy with your tax professional, and not just somebody he's lugging along trying to ask every possible question. Be proactive and have some answers ready and show that you understand. And by the way, that alone will help your tax professional be even more motivated to come up with creative ways to help you. I mean, that's just the way it is. You give more, they give more. So I hope that answers that question. Did it? Because I want to make sure, I don't want anybody afraid of asking anything, and I want to make sure I give as complete an answer as I can. Evan, or who asked me that question, by the way? My ADD is kicked in. Hello? Are y'all there? Is anybody there? Hello? Any other questions? Okay, I'm glad that helps. Thank you. So anyway, if there are no more questions, I appreciate the time that you guys have given me. Let me take off the spotlight here quick so I can see you guys. I appreciate the time that you've given me as always. I love it when you guys come. Thank you for your questions. I hope that this has been helpful. Go into the chat and get the presentation. See if that helps, because you can click on all the schedules are there. You can click on them. Well, not all. Most of the most commonly used schedules are there, just a click away, and just read through them. And then if you have questions, especially if you think questions anybody might want the answers to, post them on my Facebook page and I will answer, or at least I'll find somebody that can answer for me. Like I said, thank you for your time. I appreciate your joining. I hope you guys all enjoyed, and you have a fantastic evening. Bye-bye.